Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots for the markets for today, Tuesday, June 7th. My name is Todd Rich. I am with Nadex. With me, Brian Caprice from Keep Trading Simple. We do have a bit to talk about today. And today's because there's things moving along. But what I want to firstly remind everyone is today is Tuesday. We do that full blown session. In fact, I am dropping a link into the chat right now if you're not registered for it. In just over 3 hours, Brian will do a midday Tuesday, and it's going to be an hour-long session, not one of these 15-minute quick hits where he's going to go through everything, and not just for today, but he'll also look forward to what's coming up for the rest of the week, and we know that Friday's a big day with CPI coming out. What we do have moving today, there's two big headline pieces. The Reserve Bank of Australia last night, yes, they were supposed to raise interest rates up to 0.75% instead. And then I think it was actually only 0.6%. But
Yeah,
they
it's
ended up doing
0.6,
they did a full 50 basis point increase. So they went from 0.35 to 0.85. I don't know why they have these odd numbers, but that was a surprise move by the Reserve Bank of Australia. We also have Target warning on profits on they're going to be cutting their prices. They got to move some inventory. It's going to slash their margins. Target stock is down. It is rather interesting because that is the second retailer now. Microsoft, a bit of a retailer, software company, they did warn, but that was on FX, on foreign exchange. They do half their business outside the United States, and with the strong dollar, they warned on their profits. Target's now warning on theirs, bringing the entire market lower, throwing some volatility out there. All right, before we look at those headlines in a little bit more detail and jump into the charts, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We're doing this for your education purposes. Now, yes, there was an immediate impact, by the way, in the Aussie US dollar when the surprise announcement came out. You can actually see the Aussie dollar spiked. It immediately retraced. It's actually now, it's lower than where it was when the number came out. But there's been some other residual effects. We're going to see some things that are going on with the yen, also making some moves, seeing some additional weakness. So, Brian, let me flip it over to you, and let's take a look at a couple of these FX pairs. We'll take a look at equities for sure because Target's pulling the markets lower. And we could probably take a little peek when it comes to commodities. I think nat gas on the rise. So, certainly something we got to take a look at.
It's still, still on the rise.
Still on the rise.
Still the rise. So currencies right now, the biggest movers is basically the yen. You were seeing a large amount of dollar strength coming into the market as well, and it's starting to retrace a little bit right now, as you would expect as we roll from the European session into the U.S. session. If you're not sure what I mean by that, it's basically during the European session, there are no U.S. influences, so the big money is European. Typically, they want to make sure they get out of their profitable positions before another big player comes in, because there's no point about trying to fight big versus big money. Take your profits, reset your positions, and then you can obviously kind of manage it from there. And that's why you see session rollovers has been a big deal. But the big mover obviously is the yen right now. And this actually started last night, but in the last 24 hours, the pound yen is up 192, and I'm sorry, the dollar yen is up 192. The pound yen is up 184. So big things, and obviously all the yen pairs are more or less the same. And that came from last night. We got some news. Basically says we're going to keep up the powerful easing, right? As YCC is a pillar, and you can see it coming up, and it spiked all the way up to 132. Remember, they were talking about for 2 weeks ago. It was like, oh my god, it's weak. It's 130, and someone said, really 135. So 132 is not that big of a deal. They expect CPI to keep rising. Yeah, and their CPI is only rising around 2%. So the economy is recovering as a trend. And remember, they're not at 8 or 9%. They're at 2%. So it's still considered healthy for them. So being weak, remember, they're an export nation. This helps them. This is actually not necessarily a bad thing for them. Although I will say, I do have a friend that actually lives in Japan. And when this all went up, it was like gloom and doom. Like, how are we supposed to afford anything? And again, they're feeling the crunch there. People buy stuff from them, but for them to get anything that doesn't exist on the island is very hard for them to get. So while it drives, business to them, the everyday items and the luxuries that that nation wants from other countries
You can't get
basically
them.
disappear. Yeah. So that's where it gets really, really hard. And this is the one issue with kind of having a currency that is weaker. But again, to drive your businesses and to pay your people, it's great when your currency is weak. And this is what happens with this is why people raise interest rates and lower interest rates to kind of
Hey, we're going to pay you, and it's going to be great. You'll have a job, but you won't be able to buy any goods or services because we can't.
foreign goods and services.
Foreign goods and
Foreign stuff. Yeah, foreign goods and services, not local stuff. Local stuff they can still get super cheap, right? Because it's there. And again, the one big thing I look at this one is like, man, if it's already going to 132, particularly versus the dollar, I wonder what fuel costs are. Again, their countries not fueled as much on gasoline and automobiles as the United States is. But just looking to see what this is with the rising costs of anything, this is I guess thankfully for them they don't need natural gas as much either. But yeah. So it's this is why we're seeing so much yen movement. Now, there was one other bit of headline, which again is adding to some European weakness. This I thought was extremely interesting. That basically they've talked about now that the half point European central bank is a coin toss. I thought it was getting. I mean, we were starting to hear more and more and more and more about that 0.5. Now they're saying it's a 50-50 chance it'll be 0.5. So it looks like the market is now baking in at least guaranteeing 0.25, which is kind of lessening some of the strength that we were hoping to see in the euro. But now that it's a 50-50 shot for the 50, it's kind of like that's a good thing. I like 50-50s because the market can't really prepare for that because it can kind of go one way or the other, which means there could be some really, really great trading opportunity. And again, remember, this is July. It's not their June meeting. It's their July meeting. Their June meeting is later this month. This is awesome. This could be a great trading opportunity. So besides that, some of the other news that came out, obviously the cash rate hike, it was weird. For this meeting yesterday, the forecast was a 0.75. Then when I did it with my students and a half hour later, it was down to 0.6. And then they ended up doing a 0.85 anyway. So again, the little primate with the darts was the one that was leading the charge on this one. So again, great trading opportunity. The market had already baked in a hike. So when it hiked, it immediately spiked and then immediately kind of retraced back again. And it's more or less in the same spot that it was. German factory orders, again, not considered a major market mover, but for Europe, when we talk about raises, it was expected to be positive. Now, they did make a revision last time up a little bit, but it wasn't a positive number. And you would think, hey, you were expecting it to be good and they raised it up last time. This should be a great number. Nope, not so much. It was still down. So again, factory orders is where the economies and things like that are going in the future. And again, this impact is really kind of focused on the U.S. trader for the most part, or currencies in general. For the euro, it's hard because there's so many different nations involved with it, but Germany's obviously a big factor in that. Everything else looked good. Canada's trade balance, again, kind of matters sometimes. It went much farther down and there was a revision last time. It was forecasted to be really, really big and it wasn't. That's kind of something that, the CAD central banks are going to start looking at and be like, whoa, what happened there? And then obviously the U.S. trade balance, we're still at hugely negative. And they made it was a huge number last time, but there was a little bit of a revision down by $2 billion. But when we're talking about 109 billion versus 107 billion, it's still a lot of billions in the opposite direction. So, and we're starting to see that shrink a little, but there's a lot of different factors involved with that. The rest of today at 10 o'clock, we do have some CAD data, but we also have Yellen speaking, and she's testifying on the fiscal 2023 budget before the Congress. So I'll tell you right now, budget is a big hot button. How much you're going to spend, how much you're going to go over, what's the deficit. Biden is talking about how we've reduced the deficit. Yes, he's absolutely correct, because if you look at where things typically are, it was here, and then we had 2 COVID years where we spent a whole heck of a lot more money, and now we're down here. So yes, they're spending less than they spent last year. But it's still above where our average is. So I hate when they do those things where it's like, yes, there was a pandemic. The government spent tons of money giving money out left and right, and that's why we have the inflation problem now. So yes, it is not something to brag about that it's less. But this budget, this is politics. There are going to be some pointed questions, and they were going to try to roast Yellen today. So it'll be very interesting to see if there's any major market moving. And again, because it's 10-10-30, there could be some amazing opportunity for reversals today. As far as charts go, it's kind of like, where do we start off with? Natural gas, it's up 0.8%. It is pulling back a little bit now. And I mentioned yesterday, whenever we get some basing and some pullbacks to it, it's an opportunity to go long. We did breach the 950, and I talked about how this is really one solid day's worth of movement. Well, from where we were yesterday morning, right here, where we talked about going long from there on that pullback, yeah, it covered half the ground in one day. We went up 50 cents, and we don't even have their inventory until Thursday. So we got 2 more days to go on that one. All the indices themselves are basically reversing as well, going down.
All in
Again,
the red. Yeah.
Yeah, they're all in the red. The VIX is up 4% as well, and we haven't even gotten to the U.S. session. All the data we've heard from Target, again, Target changed their forecast. Now, my opinion on this one is it's actually more important that Target mentioned this than Microsoft. Microsoft is software, so it's a little bit different. When we talk about retail sales, we're not really thinking services. And Microsoft is more services at this point than actual goods and services that people buy, right? I mean, think how often you buy a computer, right? Maybe you buy one once every 2 years, 3 years, 4 years. How many times are people buying goods and services at Target? Multiple times a month, right? So,
yep.
And Target basically said, yeah, they're lowering kind of their earnings for the year. They're putting everything on sale because they have way too much inventory now. Remember, forever it was supply chain, supply chain, supply chain. Now, and again, that's what drove prices up. We're seeing prices go higher. I know yesterday morning it was the gas down the street from me was $4.74. This morning when I drove home, the same station now is at $5.08. So there was a 30-cent jump overnight in gas in the local area. So things are not getting better. Now we have the supply. They have too much supply, and they're saying they're already starting to see people changing habits. And we haven't even started with the 2 additional interest rate rises. So not great. And again, I think that's why everything is in the red today.
Inflation it's eating people's money. They simply won't be able to spend.
Right. And remember, yesterday supposedly transitory was coming back. They were like, hey, there are people in the camp that believe inflation is transitory again. Don't know what they're smoking or eating, but I want some of it because it's obviously not transitory.
It's not going away anytime soon.
Yeah, it's not going away. So everything is going down. We talked yesterday about, NQ in particular, those shorts coming from, 1270. Again, it just blew and it's going farther and farther and farther. The next target down here, really down south. Really, I guess there's two, but 12,309 could be on the radar today for the NQ. Again, YM also pushing down. We had that little kind of buy at the open, came up, kind of did the trick at the, the Globex high trick, right? And then bam, just went straight down. And again, it's approaching lower levels. And even Russell, same thing. Russell's at a level now where it is kind of flirting with the 50. It has been down here before, but I'd say of any of them, Russell has the best opportunity to turn green today, but it's not looking positive. Yesterday was risk on. Today is risk off. How do I know? Again, look down here, even look in the cryptos. Yesterday, we were talking about Bitcoin, 31.5, 5%, 6% up. It's down 6% right now. Ethereum down 6% right now. Dogecoin down 6% right now. And we know that there's a bipartisan bill, which is amazing. Like bipartisan, it's like, is that a thing? Really?
Do we have that anymore?
Right,
yeah.
Right. Yeah. A bipartisan bill is up today to figure out who's going to regulate and what type of regulation is going to be on crypto. Regulations should technically be good because it gives credence to it, but they're all down huge today. And again, I think the only reason it's a bipartisan bill is because none of the senators actually have any idea what blockchain technology is. They're like, wait, what is that stuff again? Yeah, let's do it together. Because by the way, do you know? No? Okay, let's do it.
It'll be fun to see because this is one where all of a sudden the politicians might agree that we have to do something together to build some type of construct around regulating crypto.
Yeah.
But this bill talks about the CFTC, which happens to be the regulator of NADEX. But there's also the SEC out there, and you're going to have both of the regulators fighting on who gets to control it. So
yeah.
I watch this. Yeah. We're going to have the politicians agree, and then the regulators themselves battle it out.
Yeah.
So it's not one. It's a war on multiple fronts on who's going to get to be able to be the overseer.
And that's the thing. And the reason why that war is existing too is just the nature of the product, and that's why I wouldn't be surprised if there is actually other people too. And what I mean by that is, NADEX is an exchange. When there's exchanges that are, again, it's easy to regulate something that's on an exchange. The problem with crypto is it's supposed to be non-conformative, right? They don't want it on exchanges. They want it free for everybody. So it's kind of like, how do you protect people from getting scammed and people losing, there was an article a couple days ago about the crocodile of Wall Street, this woman that scammed people out of I forget what it was, but it was like 50,000 Bitcoin or something like that. Her and her husband scammed people out of it. And they're like, there's no regulation. We can do what we want. And that's kind of what they're looking to, just by the nature of it. So I wouldn't be surprised if it's a very complicated regulation process. And then my opinion doesn't change on it. Yeah, people are looking at it as another asset to invest in. But remember, once all the digital currencies come out in the next 3 to 5 years, there may be other large countries that outlaw all cryptos. China's on that path. India's on that path. And again, they say one of the biggest problem is kind of
they won't outlaw all of them. They'll outlaw all of them except for the one that they create.
Well, yeah, cryptos, not digital fiat currencies. Yeah. Not the digital currencies. It's the extra ones. So
Yeah.
so we'll see, but it looks like there's going to be more risk off today. Gold kind of chopping back and forth. We had that one short breaking through, and it did. It didn't make it all the way down to the 1830, but it chopped back and forth. And again, we'll see where gold goes today. Silver did come back down. Again, we were talking about 2250 and like potentially could it get to 23? It literally turned on a dime yesterday at 8:30 and dropped. Did nothing and then kind of is holding low right now. By the way, we point this out as a time. We drew this Bitcoin level yesterday. I don't know if you guys know when the peak was, but what time did we talk about? This is the most common reversal time. 10:30. Yep, 10:30 is the red candle. Do you see where this peaked? It was literally right at 10:30. It opened almost on high and then just did nothing but go straight down. So it's just a technical time. Again, it comes in when different money is floating back and forth and profit taking. So, right now I would say, how do you trade this today? Again, on all the indices, it's very, very negative. The retail trader really hasn't had the opportunity to talk, to react to Target yet. I think there will be other retailers. This morning, I know when I dropped the boys off, it was Target. It was also talking about the auto industry, and they're starting to see sales and things like that change. Inventory is the big reason why Target and the big retailers are doing it. And they said autos are a very interesting scenario because autos, you couldn't find them anywhere. Why? Because of supply chain, right? We couldn't get the chips. They couldn't build the cars, even though all the companies made a ton of money. You couldn't buy them, right? They said COVID has now changed that model. They are not restoring their inventories. They are not trying to produce more. They want to hold extremely low so they don't fit into that problem. And as we're starting to see inventories rise, they're saying that the demand now is starting to go down. And the big question is, how much are they going to start building? Or is the auto industry also going to start really cutting back? They don't have the supply chain shortage, but people are not buying things now the same way that they were. The demand is not there. The good thing is, though, they don't have the inventory. So that was something else that they were combining and asking if it was the same Target story. So right now, all the news this morning thus far is negative. And again, markets are in the red. Look for simple pullbacks, drop it down to your 15s and see where prices are. Yesterday, looking at those 15-minute pullbacks, 2 out of the 4 had trade setups right at the open. So again, I think today is going to be a very similar fashion. And for those of you that are fib people out there, don't forget the 23.6 will be big today. Especially right now, this is the bottom. You can see that we do already have basing, and this is the NQ. There's basing sitting right there around the 23.6. So people that want to have some trend continuation, they're going to look at 12,542 and say, hey, wait a second. If we turn here, high to low, 23% pullback, that should be trend continuation. Bam. There's already sellers there as well. So a little bit of confirmation, just, kind of something small to look at for the day. But stop back at 12 today. I think that's going to be the best bet of how to trade the rest of the week.
We will be back in 3 hours. The link is there. If you haven't registered, please click that link, register. If you're not able to join, by registering, you will be able to get access to the recording. You'll get an email letting you know when the recording is available. If you have any questions for Nadex, please email us, customerservice@nadex.com. Brian and I are also accessible. We answer our own emails. In fact, we love to get feedback. I could tell you my email, todd.rich@nadex.com. I've had some great email conversations with folks, and we tweak the show to accommodate your wants and needs. So please, if you've got some feedback, things you'd like to see more of, less of, by all means, please provide some feedback. Brian is also accessible. If you have any questions for Brian, you can email him at support@keeptradingsimple.com. The real quick summary for today: Target's profit warning on having to drop prices, unload some of their inventory. It's going to squish their margins. Target is getting hit. It's pulling the markets lower. We also had the Reserve Bank of Australia raise 50 basis points, a point. So a couple of shocks into the market, creating a little bit of volatility. And again, we've got that session in 3 hours, so please join us then. Otherwise, Brian and I will be back again tomorrow morning. So until we catch you next time, good luck in the markets. Thank you so much for joining.